Do you think that managing risk is important as you scale your rental property portfolio? Yes, I'm talking about that glamorous topic of insurance, but the fact of the matter is, when you have one or two properties, you may make different decisions about insurance than if you had five or more properties. Hi, I'm Veronica Woods, and welcome to the Real Estate Wisdom channel, where we give out expert advice and share market updates, all designed to help you keep more money in your pocket as you're buying and selling real estate. In this video, I wanted to share a recent video that I did with my go-to, or one of the go-to insurance professionals that I use in the Philadelphia area. It's Jeff Jones of Best Insurance Pro. So he's an independent insurance agent and he's an investor. So he definitely has a very unique perspective. So I asked him to give his perspective on the top 5 questions that I get from my clients around making insurance decisions, especially as they think about growing their rental property portfolios. So it was a great conversation, and one of the best parts was that it also illustrated the type of dialogue you as an investor should be able to have with the professionals on your team. So with that, let's jump right into the video. So Jeff Jones is my go-to insurance professional that I ask questions to, that I direct clients to. And I really wanted to share him with some of my clients and followers so that everyone can kind of raise their game of knowledge as a real estate investor. So without further ado, I do want to give Jeff a few moments to give a brief intro to who he is and who he works with.
Thank you, Veronica. Appreciate the time and the opportunity. So I am an insurance producer, vice president of sales with Best Insurance Pro. We are not your everyday insurance agency. We are an independent agency. So what we do is assess your need, where we can find the best discounts and savings, and shop those needs amongst multiple carriers and come back with multiple quotes so that we can find what best fits what the client needs, whether it's the investor client, whether it's the first-time home buyer client, really helping them manage and mitigate their entire risk portfolio by making them better understand what it is that insurance should do as opposed to cost shopping like most folks do.
All right, and Jeff should add that he's also an investor, so he has a different perspective than the average insurance provider because he's actually trying to scale a rental property portfolio. So he understands the shoes of investors, and he knows the questions that, you know, maybe you didn't think to ask. And he can give a perspective of making those decisions himself to mitigate the risk, as we like to say. And this is going to be a good conversation. This is kind of the dialogue that I engage with Jeff and other financial professionals all the time. So I compiled a list of what I say are my 5 top questions that I frequently get from my clients. And we're going to give Jeff a chance to give his take and perspective on them. And then hopefully everybody will have some takeaways and be smarter about how they're thinking about managing the liability of owning a rental property business. So the first question is around the safety measures to install in a property to reduce the risk. A lot of times when we're landlords and we know that there are kids living in the house, we worry about the basement. I get questions about, are there things we should do with the windows? What would you say a landlord should do to kind of reduce their risk as far as installing features or amenities in a property?
So there's a tiered way of looking at this. So we'll start with the simple. The simple are the required things that you need for the CO or the use in occupancy. A fire alarm, smoke alarms, fire extinguisher, deadbolts. Check your railings and things so people can't fall off a balcony or fall off steps of 36 inches or taller. Things of that nature that you deal with when you're getting those occupancy certificates. The next tier cost you money, provide you greater savings or opportunities for savings with dwelling products, insurance products. And those would be things like a hardwired smoke alarm system that goes into a direct alarming company. Something, maybe it's a simple safe, or maybe it's an ADT, or maybe it's a central system somewhere. You'll get a discount for having a centralized system because it'll be instantly reported. Maybe you want to put in a water sensor system. A neighbor of mine went on vacation, came home to several inches of water in his basement because it leaked through his kitchen. And without a water sensor, it just kept leaking. There was no alert. There was nothing telling him that water was escaping the pipes. So having some kind of centralized system, and there's going to be a theme, a centralized system will always alert someone that there's a problem. Not super expensive to install, but definitely super savings, right? When there's a problem and you're not aware of it, or the tenant's not there. Even a censored shutoff that runs within the Wi-Fi that not only alerts, but also can disable the hot water tank system, that can disable water flow through the property so that you don't get an accumulation of water.
Have you seen the water sensors common with rental properties? Because I haven't seen that too much.
So it's a product that has become more prevalent in the owner-occupied home, but it is a logical jump to putting it into a investment property, because think about it. If you're not there, right? You're a landlord who owns a property and rents it out. And if the tenant is still a human being, right? They may go on vacation, they may be at work, they may not be paying attention to water leakage in the basement that's supplying the hot water tank. So having something that would alert, even if it's just a sound, a beeping or a siren or something along those lines, at least it's an awareness that could prevent extra expense, problems with the tenant, and so forth. So it is something to consider in the long run. And there is a discount that most carriers, all the carriers we deal with, have a line item question about that, that they would offer a discount for it. Also, if you have a sump pump in the basement, having some type of battery backup so that sump runs in the event of a power failure. I've seen situations where you have a sump pump, but
it wasn't on.
But it wasn't on because within the storm that caused the water backup in the basement, it took the power out.
Right.
So now the power's out and you still have, a foot of water in your basement. What did you lose in that scenario? Probably your hot water tank, probably your heating system, probably your washer and dryer, because they're sitting within several inches of the floor, generally speaking. So having some type of backup, just like you would your computer system, a battery operated backup that gives several hours of fault tolerance that sump pump's going to run, may save you thousands of dollars in a claim later.
Mm-hmm. What about some smart technology? I have some owners kind of thinking from smart locks to smart sensors on the HVAC to be able to monitor the heating. Are there discounts for that?
There are so smart, but there's also it's just smart, right?
Right.
Because so you have to think about the totality of insurance, right? Insurance is designed to protect you in the event of some catastrophe. So what the insurance company sells you up front is, okay, well, if you get water backup or you get this or you have this issue or there's damage, we'll protect you. And then there's the fine print. Mm-hmm. So the smart technology helps offer explanation and mitigation when you're dealing with the examination, right? Now you have the inspector in the property. They're mm-hmm. looking for the source of the problem. And had you not had that smart technology, maybe it's at the fault of the tenant and the claim might not be covered. So this gives you a leg up on making sure that your coverage is there. But again, this is one of the reasons why relationship, as you alluded to in your introduction, is important with your agent, because you want to have the conversation with your agent before the claim is made, so that the agent can kind of hold your hand and be at your side to guide you through that claims process to ensure that as much coverage is available to you in the event of that catastrophe.
Okay, let's top to question number 2. So on the lines of repairs, what about capital repairs? So a lot of clients I work with, when you're doing your budget to get the property, you're trying to minimize whatever you can do to make the property rent ready. And sometimes people want to cut corners, like, what do we minimum need to do to get a tenant in there? That's the conversation that we have. But are there things that would kind of help if you prioritize that repair? Are there things that would help reduce the risk and your hard insurance costs in the long
run? Yes. So one of the primary things, right, is the roof. The older the roof, the less insurability you have and the higher the risk you have on that policy. So what does that mean in English? If you have a 20-year roof, you may have a hard time, or older, you may have a hard time placing insurance on that property. Why? Because it's likely to leak, cause water damage within the property that the insurance company would then be liable for. So they are an insurance company. They mitigate your risk. They're going to mitigate their risk. So they want, a newer roof. A flat roof, which is not a favorite of a lot of insurance companies, but that's a maintenanceable roof, right? Do the seal coat every 2 years, 3 years. That will help give longevity to the roof, but it also adds insurability to the roof. And you may find some discounts when the inspector comes to see those things. But the roof is absolutely one of the biggest ticket items that you should repair, at a minimum, replace, definitely if it's 20 plus years or older. That's my number one thing. Now, other pieces, other top end repairs, windows, right? They're not, if they work, if they seal, if they close, then they're fine. But if they're broken, if they're shut, these are all telltale signs, just red flags. So you want to fix the broken windows. You want to make sure that every ingress and egress to the property is sealed and locked, right? You want to make sure that no one can get in without some type of permission, the implied permission being a key. and you want to make sure those doors have deadbolts on them at all possible. Now, there's a code piece to the proper deadbolt. You want to make sure that those are on there as well. One of the things that as you and I have walked through properties, you laugh at me all the time because I talk about the wiring, but knob and tube wiring is an absolute gotta replace it. Gotta upgrade the electric, because it's a fire hazard. So you will find if you're an investor and you have 4 or 5 companies that tend to like your risk, they are not going to like your risk when there's knob and tube electric. So that is something you want to deal with.
The fact of the matter is, though, in Philadelphia, of all these older houses, unless someone did a complete gut rehab, it's something that really comes up quite commonly. So I try to tell my clients that we want to solve for that or find out the answer to that. But it's definitely something that's, you can remedy it. But then I hear from some forums like your favorite Bigger Pockets that there are people who are getting insurance with knob and tube. So what do you tell them then? Do I have to replace all the knob and tube if I can really get it, even if I have it?
Well, it's a cost benefit, right? You can find someone who will sell you insurance, but they will sell it to you at a greater cost because it is more probable that there's going to be a claim. So they're going to try to get more money up front. So I've had situations where someone bought a house, they were planning to live in the house, and they were renovating the house, and they had knob and tube, and one of my preferred carriers really liked them and a really good product. And then the knob and tube came to light, and they said, well, if you show us a contractual agreement between you and an electrician to mitigate this knob and tube, we'll insure you, but we're going to monitor you over that timeline to make sure that it does actually happen. So they were able to get a very good policy on their home and personal auto and package it, but they had to do a little bit of legwork and get that electrician on. So anything's possible, and it goes back to my sell point of having that relationship and that independent who will advocate for you may help you out in the long run. But knob and tube, you don't have to remove it per se, but you definitely have to disable it in such a way that it's not the most prominent electric in the house.
No, that's definitely a good point. And a lot of times clients get confused when they're talking to the contractor of what are they really paying for? Are they really rewiring the whole house, or are they disabling the knob and tube? And then you want to be truthful when they're talking to you about, do you have knob and tube? You want to be honest and accurate about what's going on in your property.
I think the key takeaway to your point is that we at Best Insurance Pro are your advocate. Much like your doctor, if you don't tell your doctor all the facts, they can't help you get better. If you don't tell your agent at Best Insurance Pro all the facts, when these things come to light, when these problems come to light, and they will, because carriers will send inspectors, right? They will do an exterior inspection, which is more prevalent because of COVID. But prior to COVID, they were going into the property, and we're starting to see the resumption of them entering properties and doing eyes-on inspections of these properties. So these things could be revealed. If you tell me a lie, then I look like the liar. And when I go to advocate for you to the carrier, you've just destroyed my credibility. So where I might be able to buy us time and buy us the means to fix some of these things, now if my credibility's shot, we can't they may turn. They always have the option to cancel with 30 days notice.
Mm-hmm. No, that's a good point. On the plus side, I think if you could just touch on communicating when you have made updates, because I focused the question around when you first buy the property, but then there's times maybe 2 years from now you've done some upgrades. When does it make sense to update your insurance carrier about changes you've made?
I would actually say that it's important to, as you do renovations, as you do repairs, as you do replacements, to advise your agent ahead of time. And there's a couple of reasons why. So if you're doing major renovation to a property, you purchased it, you kept it for a year or two because you were appeasing a tenant that existed in the property. Now that tenant is gone, the property's vacant. You want to start opening up walls and doing major renovation. Well, you want to talk to your agent because one of the things you want to talk about is builder's risk. What are you doing with this major renovation? What kind of equipment's going to be in the property? How long is it going to take? What kind of impact, positive impact to the value are you going to have? What kind of materials are going to be in the property while it's there? Because your standard policy does what it does when you bought it. It protects the dwelling for the amount you specify, but no more. And your personal property may only be a nominal amount because it's a dwelling policy as opposed to your home, and the computations are very different. So when you're doing major renovations, that builder's risk is something you want to talk about because you want to protect the increased value as the work proceeds. In the event something catastrophic happens, you want to make sure there's enough liability so that in the event somebody's delivering a pizza and slips on wet paint, you're going to be named in that suit. You want to make sure that you're covered there. But if kids decide to break into the property while it's vacant, while the work's being done, and they steal all the materials, that's on you. And the builder's risk would allow for extra coverage, so those things are taken care of. You also, if you're doing a roof, you want to let your agent know that you're doing the roof, and you want before and after photographs so that your agent can have that in the file and share that with the carrier and optimize any discount. And if that carrier is not willing to give you one, well, your agent's going to shop you at renewal and use those photos to prove and the receipt that you have a new roof and what was done and what kind of warranty is on it. Same for windows, same for plumbing. Big ticket plumbing, right? If you're going to replace your hot water heater, if you're going to replace the broiler and a radiator heat property, all those things, all those repairs, you want to let your agent know during the process. Because one of the things I'm going to say to you is, have you checked the contractor's insurance?
Yeah,
do they have general liability? Are you protected? Because that's my job to manage and mitigate your risk.
It didn't add, that question is not on our top 5, but you raised the point of what your insurance covers versus the contractor's insurance covers, especially if you're doing a bigger renovation.
So the contractor with general liability, you with the builder's risk, you're going to deal with people entering your property, slipping and falling, things being stolen from your property. But the contractor's policies or coverages protect you from their negligence.
Okay.
So that's, in a nutshell, there's, you know, the sad thing is insurance is one of those things where at the end of the day, there's some subjectiveness to it. So we can do all that we can to tell a clear story and make sure you're prepared, but there's always the potential of litigation. And that's where things kind of get vetted out. So if the contractor created a tripping hazard in the midst of doing their work and someone came into the property, tripped and fell and sued you, the insurance carrier might say, well, we're going to subrogate this with their insurance because it's their fault. So that's why you always want that there, so you're not the end result of the claim.
Okay. All right, which goes to question number 3. You brought up the contractor. Let's go back to the tenants. So tenants should have renters insurance. So I know you're going to preach that, but in general, I think a lot of property owners aren't sure what they should make the tenant's responsibility versus the owner's responsibility, especially when we're dealing with a single family property. A lot of people get into investing in single family rentals because they think they can push a majority of the responsibilities of maintenance to the tenants, but there are some instances where that's not a good idea. So I know you have an opinion on that.
So, all right. So the first chapter and verse, tenants should have tenant or renter's insurance. And the reason being is very simple. Their property in your property is not your problem. So if something happens in the event of a leak or whatever in the property, their personal belongings are not covered. So what renters will give them is some level of coverage to their personal property. The other piece that renters will give them is an added layer of liability insurance when their friends come to your home where they're living, or to your property, your dwelling where they're living, and make a fool of themselves and fall down the steps or something like that. That layer of liability protects you, right? I recommend my investors have $500,000 liability, which is really, when you look at the price point, pennies in comparison to what most people get. But a renter's policy might add $100,000 to that. The standard policy that I write for renters is about $100,000 of liability with about $25,000 of personal property. A policy like that would run probably $100 to $150 a year. So that's not a terrible price point for the renter. But think about what happens when the renter loses everything in a fire, right? Something like that. And then you have to tell them, well, that the fire just happened, right? It was, you left something on the stove or what have you. That's your problem. It's not like something faulted and that's my problem. It's your problem. The big ticket items that we kind of talked about, drainage in and out of the property, water, sewer, that kind of thing. I'm not letting a tenant fix that. I hesitate to let a tenant fix plumbing issues because you just don't know how they're going to fix them. And if they do something that exacerbates a problem later, and they just keep pushing and plunging and whatever, and it backs up at the outside connection and backs up into the property, I recommend my investor clients have water backup on their policies, but the limit tends to be about $10,000. So that problem could be $15,000, $20,000 when all said and done, right? Because again, in a basement, you might have heater, hot water tank, and so forth. And if it's because they just exacerbated a problem instead of repairing that problem, that's on you. And there's always the problem that the insurance company might say, well, this was preventable, and it's your problem.
Yeah, I just wanted to jump in with an example I thought about when I knew we were speaking tonight. There was a client, before we took over managing it, had their tenant install a new hot water heater, a new gas hot water heater, which is significant. And they didn't vent the hot water heater correctly outside the property or through the chimney. And in the mix of changing over utilities, the gas company just shut off the gas totally at the building or to that unit right at the time we were about to move a brand new tenant, and he had no fault, or all he wanted was hot water, and it became a huge expense to kind of do an emergency by expensive gas hot water here that vented correctly. But it's all because the owner had the tenants, figure out what they wanted to do with plumbing, and they made their own decisions that clearly wasn't up to code.
Mm-hmm. And that's a great example, but I'll take that example to a different level, because there's a silver lining in your example, right? They were able to identify it, spend some money, fix it, and correct it, and no one was harmed. Mm-hmm. Imagine if that went the other way. Mm-hmm. Whose fault is it?
Right.
Because all eyes are on you, the property owner, mm-hmm. and the carrier might say, that's not my problem. Mm-hmm. Because you let them do it. That's not my problem. That's your problem. And imagine that kind of liability, which I will take the 30-second spot there and say, this is why everybody needs an umbrella. a personal extended liability policy that might intervene because it protects you, the owner, not necessarily the liability specifically to the property. So that's something you need to talk to your agent about.
Mm-hmm. And what about your favorite landscaping?
Well, landscaping is another, cut the grass, weed whack, that's okay. But do I really want somebody who's not trained with a chainsaw trimming back a tree? Because again, we start talking about liability when they fall off the unsecured ladder. And as they're falling, the running chainsaw takes off some limb. And now, they're disabled. Right? They have it, and I can see this is a very far-fetched example, but it is possible, which is why you have to be logical and thoughtful about what you want the tenant to deal with and what you don't. My opinion is the nuisance stuff is okay. But the stuff that's going to cost me money in the long run later, if it's messed up, leaky pipes and so forth, trimming trees and that human possibility, I'd rather have that expense because that's less than the potential expense if something goes wrong.
All right. No, good point. I just wanted to raise the issue when you're more of an absentee landlord, and there's you feel like you can't put your eyes on it, then sometimes I've heard quotes, oh, the tenants know the house better than I do. That's really not a great thing. If the tenants, then it's what they're telling you that they're taking care of on their own, and then what about that they're taking care of on their own, they also can be an issue. So setting policies clearly.
Another piece that we take for granted, we don't really think about, is snow removal. So most municipalities have requirements for snow removal. Where I live, you're required within a certain amount of time at the end of a snowstorm to remove snow from the sidewalk, not necessarily the walkway and steps, which makes sense, and you're on the hook for those, but the sidewalk. So imagine the tenant that just shovels the walkway, shovels the steps to get to their vehicle, and that's all they do. And then Miss Johnson from down the street comes walking along with her little puppy, slips and falls on the unremoved snow. That's on you, the dwelling owner, not the tenant. So check follow up, right? These are in your leases that we have the right to check these things out. Make sure that if you're going to make them responsible for snow removal, that they understand what they're required to remove and then hold them to it.
No, that's definitely a good point to add, especially as me as a property manager. Sometimes people don't understand, are they capable of doing it, or do they know, their frequency or time to shovel may be different. They may think they have 2 days to shovel the snow, but the municipality gives you it's like 6 o'clock or something when the snow stops falling for the most part in this area. So that's a good point.
Some are within hours. And here to just kind of wrap that up and give it a name, we talk about lawn maintenance and management, right? It might cost $30, $40 a cut to have someone come out and cut and blow the trimmings away and so forth. Snow removal might cost you $25, $30. The fines for not doing these things in some municipalities is like $300 first offense. Second offense, it goes up. Third offense, it's a violation, and you're in the magistrate court defending yourself. And potentially, far-fetched as it may be, potentially, if it's an ongoing issue, you could end up with some time in jail. So, go back to the $30, $40 a cut. Maybe making a deal with a landscaper suddenly makes more sense because you're saving money in the long run and a potential headache.
So I know we stress a little bit beyond pure insurance topics, but they are kind of all related as you just think about having policies that are consistent with what is in your insurance. But let's go on to question 4. Well, the big LLC question. Most new investors are very excited about, forming an LLC and putting their properties in an attempt to just kind of do the right thing as far as separating their personal versus their business. Like any other business, you want to kind of have separate bank accounts and whatnot. But LLC is one of those topics that goes across a number of issues or considerations. You got legal issues, you got accounting issues, and then you have liability issues. So I wanted you to kind of speak to the concern from a liability perspective. When should you go LLC versus holding the property and insurance in your own name?
So I'll preface my answer with, I am not an attorney. Speak to an attorney and and speak to an accountant and get their insights as well. I am not opposed to LLCs, but here's what I've found with investors that do LLCs. The liabilities are the same, right? You can get insurance coverage for your dwelling in your LLC and get liability insurance. You can even get an umbrella policy. But one of the things we have found is that there's a couple of things that folks do with these LLCs that make insurance at some point very difficult to place and scale the bigger they get. So if you're an individual and you come to me, I'll use the example this way. You come to me and you say, hey, I want to start real estate investing and I'm buying this property and I'm going to put it into 123 Street LLC and I'm going to be the sole member of the LLC. I would start to talk to you about your personal home and auto, because there are products out there with some of my more premier carriers that we can package your personal stuff and then start to add your personal solely owned LLC, or maybe it's you and a spouse who's a named insured on this policy. We can start adding those properties to that policy under dwelling policies, and we can probably get up to 10 plus your primary residence onto one package. What's the benefit of that? Well, let's say you own this same LLC with your brother or sister, And now I can't do that packaging. We're going to have to go to a different market. That price difference between adding it to your personal bundled package with a Safeco or a Foremost might be $200 a hit. Well, do that times 10. Now it's $2,000 a year total for the 10 properties. So looking at why you're doing an LLC and how you're structuring that LLC and how you're handling your personal insurance needs all plays a part together. Now I said earlier, everybody needs an umbrella. So when you have that package with Foremost, it's like a Grand Protect package, they call it. So it's a better policy, it's more robust. Well, you can add an umbrella to that. Well, you start to discount all your personal stuff as you add these policies to it, and they just mesh into that umbrella up to the 10 properties into it. Now, I don't know how many investors go above 10 properties, but let's say that they do. Well, there are other products out there, but the bigger you get, at some point you're going to cap out. It's typically somewhere around 24 to 30 properties, depending on, again, the structure of your LLC plan. Am I doing it with my wife and I, or my significant other and I? Am I doing it with my partner, fill in the blank who they are, right? Because there's a divestiture of where you can go with those policies. With a partner, you tend to cap out at about 24, and now you have to start looking at commercial products to really add those layers of protections that you need from the personal liability standpoint. Now, again, I strongly recommend you always get $500,000 liability per property. There are carriers out there that offer you an equal layer of protection for personal liability for those properties. But at some point, they're going to cap out at the number of properties they're going to insure for you, and it differs by carrier. A lot of information, I know, but that's why I go back to having an independent at your side, because when you get to that commercial business owner policy with general liability and personal liability, structure of all these LLCs starts to become relevant. Well, if you own a 50% share of each LLC as Veronica Woods individually, that may become difficult to buy a Veronica Woods business owner's product that offers the extra umbrella coverage that you would need. So knowing early on as you structure these things will help headaches later as you grow and grow and grow and grow.
There's two takeaways. Obviously, this LLC question is not a black and white issue. It's kind of, it depends. And it also kind of brings to light that you really need to have a team of professionals to look at it from every angle based on your specific situation. You threw out a couple of things. Are you buying with your spouse? Are you buying on your own? Are you buying with unrelated business partners? They're all different things in the mix. So we definitely can't dive deep into the LLC conversation on this short seminar, but I thank you for giving a flavor from a pure liability property risk perspective, some things to think about. And you did also kind of tee up number 5, which is things to consider as you scale. And you brought up certain benchmarks. And I don't have the stat in front of me, I didn't confirm it, but most people own less than 4. So by far, most real estate investors, even though we may dream of becoming moguls, most people own 4 or less. However, in the Philadelphia area, there's definitely some folks who have built up, and throughout the country, larger portfolios. But even if you're kind of going from your first 1 or 2, getting up to that 5 or 6, maybe a larger portfolio? What are some things you wish that people would think about? I think you dropped a couple of jewels along our discussion. Maybe you may want to reiterate those things that weren't a problem at 1 or 2 properties, but became issues at 5 or 6 properties that would be helpful.
So, I mean, there's a lot of ways to go here. So structure and design of what your vision is. I'm an advocate of a game plan. You can't win anything without a game plan. So having a vision for where you want to get and will help you get there. Having the team, and that initial team may be just consulting with an attorney and knowing what you don't know, consulting with an accountant and understanding what you don't know, consulting with the insurance agent and getting a better grip on your personal situation so that you're better protected going into the investing thing. Now, as I alluded with the LLC, we talk about number of units. Well, it's not number of dwellings, it's number of doors. So when you get a duplex, that's 2 doors, right? A triplex is 3 doors and so forth. So those can add up pretty quickly. One of my bigger investor clients has 21 doors plus his own property, but he only owns 11. I got 11 policies with him. So you can see how those numbers add up fairly quickly. So he was one that didn't look at structure. So structure and design of how he's going to do these LLCs became very important because now we're struggling with the umbrella question. The other piece is that looking at the number of doors you're going to buy in your investing cycle, right? Because up to a quadruplex, 4 doors is one product line. Once you get behind 4, you catapult yourself into a very different product field. There's less carriers out there. They're more precise. Their questions are going to be more pointed. Their investigations are going to be more pointed. And I'm not saying that, it's easier over here 1 to 4 versus 5 or more. It's just 5 or more implies bigger dollars, bigger risk, bigger issues. So they're going to pay a little bit more or bigger attention. So you want to be aware of that because that's not every carrier can place those. Not every agency can place those. So no, and the price point's not the same, right? I've seen duplexes, triplexes, depending on age of building, age of roof, and so forth, where the policy could be, and zip code, policy could be anywhere from $1,500 a year to $2,000 a year. And I've seen, multi-unit properties and multi-use, right? It's got like 4 apartments upstairs, but 2 commercial units downstairs. Very different policy. Very, and that's going to come with more dollars. So
that's an important point, just to reiterate. So there's multiple ways you can scale. You can scale with buying just more of the same type of properties, or you can buy bigger properties. So as you mentioned, 5 or more units is considered a commercial grade just from the buying process. So the whole process of buying 5 or more units, from getting a loan to the due diligence process, is all different in a bigger game or more complicated questions, Jeff, to your point, are asked along the way. So that's really important to think about when you're scaling the size of one. You're just buying one 11-unit apartment building where you're saying, well, it's not a high rise, but still you're in a different ball game all around with making decisions.
Well, even a multi-use property that's smaller, 4 or less, but has a commercial use entwined in that property, changes the type of policy as well.
Right, because that's, if all you need is one commercial unit, it could be a duplex. It's a commercial property game. Yes. Yeah, it's different loan, different everything.
different process for insuring and so forth. So yes, definitely know what you're stepping into before you make the offer.
Any other words of advice as someone scales doors, buildings, size of building?
A conversation with an independent agency like Best Insurance Pro costs you nothing. But relationship can save you thousands of dollars, because when you have a relationship with an agency that their job is to advocate for you and have your back, you can suddenly you have a source, you have a resource that you can go to and ask these questions and have these discussions. And the other piece of that I would lend is that sometimes cheaper is not better. So when we talk about insurance, it's a very huge, important item that after you've identified the property you want to invest in, after you've identified that it meets your plans, you really want to have a conversation about vision with that agency, like a Best Insurance Pro, so that you're not undervaluing your investments by underinsuring your investments.
Now, on that note, I want to, too far back, share your contact information, and thank you, Jeff, for giving your time. I know you're very, very busy, but I think that my audience appreciates your expertise, and I think you dropped a bunch of things to think about when you get that renewal conversation. Am I having these conversations with my insurance provider, or am I just giving the next year's quote? And if something happens, as you said, as they inevitably do, do you have the right person in that seat on your team to be able to strategize about what to do next and, your next investment? So with that, I thank everyone for participating in this VIP investor series. Really, the purpose of the series is just to bring you all the experts that you may not have on speed dial yet, but as part of my community, I'm bringing them to you. So with that, stay tuned for the next one.